I'm Guus Frericks. I'm CTO of 𝗀𝗵𝗶𝗽, and I am here together with my colleague Radia. Good afternoon, Radia.
Hi.
Yeah, thank you very much for connecting to this second webinar. This is indeed the first webinar took place on the 22nd of July, and it is still available from the YouTube channel, the aCCCess YouTube channel. You will have to just connect onto the channel, and once you will be connected, don't forget to subscribe, of course. So we have here today two special guests for you. We have today Christian Claussen, General Partner at Ventec. Good afternoon, Christian.
Good afternoon, everybody.
Thank you very much for being with us this afternoon. And again, we also have Guus Frericks, founder and managing partner at DeepTechXL. Good afternoon, Guus.
Good afternoon, everybody.
And thank you for being with us. All right, so Radia, maybe you can start with a quick introduction. So this webinar is interactive discussion. We want you to share your questions. You have the opportunity here to have today two investors who are ready to ask even your hardest question. Can tell you that Christian and Guus don't fear any question at all. So don't hesitate. You can ask them whatever you have in mind. So you can simply send your questions in the chat box. So we'll start with the first interaction together. We're going to ask you if you already applied. We have started the application process already at the beginning of the summer. As you will see, we are almost done with that. So, Radia, you can launch the question. We have then about 10 days to go for the registration, and the poll is open. So, are you planning to apply for the Chiefs Venture Forum? You have either already applied, you will apply, or you're still thinking about it. As you can see here, we don't take no as an answer. So yeah, we only want some positive thinking. So take your time to reply, and in the moment I will simply hand over the microphone to Radia so that she can introduce quickly when the Chiefs Venture Forum will take place and what it is. So can we see the results? So yeah, there are still some people who are thinking about it. So I hope that at the end of this session, you will be convinced. So Radia, the floor is yours to give us a few information about the Chiefs Venture Forum itself.
Well, hello everybody. The Chiefs Venture Forum is
Switch.
Here it is. So hello everybody. The Chiefs Venture Forum is brought to you by a network of competence centers in partnership with the 𝗖𝗵𝗶𝗃 Accelerator and DigiConnect, and in the presence of leading deep tech venture capital investors, corporate ventures, and industrial players. It's not just a one-off event. It's an entire process designed to support collaboration and investment. And the first edition, which is this year, will take place in November 18 in Munich, and especially in Munich International Conference Center during SemiCon Europe. So just to explain a little bit the process in a bit more detail, you have until September 18th to apply, so there is not much time left. Once applications are closed, we will start. Alice, can you? Okay. So I will give you more information, but just so that you know that you have until September 19th to apply.
All right, thank you, Radia. And let's move to our guests, to the introduction of our guests. So I will ask you, maybe we can start with you, Christian. We have a set of slides for you. We integrated the slides into the presentation. So can you maybe introduce yourself, your background, where you come from, and then we move to the introduction of your firm.
Okay, I'll start with myself. I'm a venture capitalist since 1998, so I'm an old man. And before that, I worked for almost 10 years in the telecoms industry on the side of optical networking, and I'm a EE by education. So that's where I come from. That's the reason why I've always been exposed to semiconductor systems, semiconductor chips, semiconductor IP, and all that. Not much to semiconductor production fabs and all that. But the design of systems, design of chips and SoCs and all that, I've got a lot of personal experience in that. I represent, I'm one of the partners here representing Ventec. Ventec is a European venture capital firm. We have an historic headquarter in Paris. That's where the company was originally founded, by the way. The same year when I started my life as a venture capitalist in '98, and since then we have spread out into a couple of offices that are listed here. I'm speaking to you from Berlin today, yeah, we are a rather mid-sized European company in the venture capital with more than $1 billion or something raised. We just closed our latest flagship fund. The press release went out, I think, 2 days ago or so, we closed that fund on 175 million, which is a good fund size for us, with a focus on Series A investing. We are relatively broad. We don't have a sector thesis, so we invest into innovation, into digitalization in a large sense. Obviously, these days everything is about AI and what have you. But things come and go, fashions come and go. We are one of the few firms in Europe that actually does hardware investments every now and then. It's part of our strategy, hardware, in the sense that most of the hardware is software at the end of the day, obviously, but semiconductor, there's not many funds that are investing in that sector, and we are part of that. So I think with that, that's maybe interesting for, if there are entrepreneurs here, I guess, in the room, then you might be interested in the phases. We're seed, post-seed to Series A, and typically putting an initial ticket of $1 million to $5 million into the companies. The thing that you see on the right side is, I think, not relevant for today, the 𝗂𝗵𝗶 venture. That's an impact fund. Forget that, just regard the left side, at least on my screen here. That's the fund, the flagship fund, where we do semiconductor also. That's the portfolio, but I think we don't need to go through that. We should consider. Maybe we can point out a couple of, if there's semiconductor companies on here. There's
a slide at the end. Maybe.
Yeah, they're here. Yeah, 𝗀𝗃𝗃, for example, was a French company that we invested in. It's an IP company solving the interconnect problem on large SoCs. We started that in 2003, really as a slide deck with 5 founders, and introduced the company in 21 on NASDAQ. So that was a long ride, and it even had an exit in between. So that's a funny story. But you see, there's I'm currently invested also in. These are not the right ones here. I'm sorry, I don't know where that comes from, but I'm currently invested in an OLED company making. They actually make OLEDs. It's down in Grenoble in France. Company by the name of Micro OLED, very small displays for near-eye applications. We have a large investment in a RISC-V processor IP company that was originated in Brno in the Czech Republic, called 𝘂𝗬𝗄. And I just recently put some money into a Dresden-based startup that is also producing actually material powder for p dopants that are used in the production of large OLED displays. To make
photonics, OLED and displays and photonics has been or is still an important topic for you.
Yeah.
Well, thank you very much for this introduction. Guus, maybe you can also give us a little bit of your background and, of course, your investment thesis.
Yeah, my name is Guus Frericks. I'm a Dutch citizen. I guess nobody is perfect. I've been in the semiconductor industry for close to 3 decades now. Started my career at Philips Semiconductors, was part of the team which spun out. I'm founding member of NXP Semiconductors. I've been running a joint venture between Sony and NXP to contribute to worldwide standard of contactless mobile payments. So if you used Apple Pay or checked in public transportation today, we contributed a little bit to that. I built my own semicon company. It was a rough ride. We started with a bunch of friends in 2011. It was very difficult to get the company funded in the Netherlands, in Europe. In the US, it was pretty easy, but then we had to move the whole company to the US. We didn't want to do that. My dream was to build a second NXP. Long story short, after facing potential bankruptcy for 15 times in a period of less than 6 years, we managed to sell the company to Apple in 2018, and they are rolling out the technology in all their product lines. So now, and yeah, that entrepreneurial ride was so tough and so hard, but it was also like I was a bit frustrated with the VC landscape in Europe, with the lack of the knowledge and focus. I mean, yeah, Christian is right. There are only a few who only invest in hardware, and a few were only in semicon. So I was like, I want to create my own fund. There was an ambition in 2021. We have one of the cornerstone investors was ASML, who's located around the corner. We closed our first fund, 110 million in 2022. We did the first close, and yeah, we are investing in semicon. We are investing in hardware. We don't do pure play software, so we really the VC of the complicated photonics semicon equipment. So we have invested. One example in a company which can directly with a laser print solar paste on high-end PCBs. You might ask yourself, why does that matter? As chips get more complex, the mounting on the PCB gets more complex, and the good old stencil printing is, I would call, dinosaur technology from the 80s. And now lasering directly the solder paste on the pads and monitor in real time with visual inspection quality. Yeah, that's super cool. And in fact, we had SpaceX visiting this company yesterday. They were super impressed by the capability. So yeah, we love semicon. Semicon is very complex, very hard. I speak from experience. I'm fully full with battle scars. Some of the wounds are still healing. But if you love it, you find this nugget of where you can truly have a differentiating proposition. Yeah, you can do amazing things. So I want to leave it there for now.
Thank you, Guus, and yeah, sorry for the scars. And yeah, you explained very well why semiconductor. It's built in the fund. So just to give some details, so DeepTechXL is investing only in the Netherlands, and while Ventec is investing throughout Europe. It's slightly more open. So Christian, can you mentioned that the fund is agnostic technologically or from the technology standpoint. So why semiconductors? Maybe you can elaborate a little bit on that.
It is simply, a question whether you have knowledge in the space or not, and experience, and then we happen to have myself, and we also have my French partner, 𝗀𝗵𝗶𝗃, who worked in that industry and is a polytechnicien by education, so engineering. guy, and there's an analyst that we also have who understands this. So it, you know, it just happened, and we've done many things. And you know, maybe one thing that is interesting to the crowd here, I saw the evolution because I started in '98, or like my partner Jean, and in the first as a VC, you know, and in those days it was all about telecoms, and it was about systems, it was subsystems. I had investment in Nuremberg in 2000 into 10 gig optical cleaning interface, you know, or cleaning optical signals in the electrical domain. These were subsystems where the guys were making the chips. They were making, they were putting lasers and photodiodes on it, and selling that to the Philipses or the Ericssons of the world. Since then, you know, with Moore's law going on and on and on and on, and how many times have we heard it? It's now over, but it has never been over because somebody found an optical trick to go to the next node. And with that evolving, we saw as VCs, I think, first was systems, then it was chips, fabless semiconductor, you know, making chips, obviously not producing them, but having them produced in a fab. But even that for VCs became difficult because these chips, if you build a large SoC today, you need 200, 300 million in R&D effort. Yeah? If you're on the leading side of things, you know, okay, there are US companies like Tenstorrent, or I don't know, people like that who get that money, but in Europe, it's very difficult to find. So we moved away from fabless chip investing to IP, semiconductor IP. So the whole thing became really only software, if you like, and we've done a couple of things. But these are also difficult, you know, long J curves where it takes a lot of time. If you want to live on royalties, you have to first sell and then wait for a ramp and all that. So things have changed a bit. I think what we're seeing today is typically in the semiconductor IP space. Then there was for a longer time, there was even some technologies, and I see them, I don't see too many anymore, but that were focusing the semiconductor manufacturers, you know, machinery or technologies that are used to manufacture. Guus just mentioned something that you could, in a large sense, from what I understood, class into that group, because if you make PCBs with a new method, okay, that's sort of you helping the manufacturers. And every now and then we see something, but that's a very special area where even if you have the greatest technology in the world and it's super innovative, you have to think about what it means to really build a company around that, because, you know, you sell to large fabs, they rely on your shit, and if it doesn't work 24/7, you know, and you don't have the service engineers around and stuff, so there's a lot of stuff that goes around, you know, just technology there, which makes that space also quite difficult. But you know, every now and then you see interesting companies, right. Just to give you a scope, you know, how the business models, if you want to call it like that, evolved over time for venture capitalists to attract venture capitalists.
All right, the business model is super important. Thank you very much. So we're going to switch slightly for a few minutes about the process. So we're coming back to you, Radia, for the follow-up on the process presentation.
I cannot hear you, but...
Thank you, Regis. Thank you, Christian and Guus. So as I said earlier, you have until September 19th. Okay, sorry, I put my mic. So as I said earlier, you have until September 19th to meet Christian and Guus and other investors in Munich. And once applications are closed, we will start what we call the digital sessions. These are one-to-one meetings with investors who are aligned with your investment thesis. So each meeting lasts about 15 minutes. 5 minutes for your pitch, followed by 5 to 10 minutes of Q&A with at least 3 different investors. Investors will therefore meet several startups, one after another, and will be able to evaluate them. The selected startups will then receive coaching and will have the opportunity to pitch at the event on November 18th. And they will be re-evaluated on site, so at Munich, and one winner will be designated. Of course, all startups will be invited to the event. There will be where they will be they will be able to meet other investors through one-to-one meetings and take part in networking sessions. So how to apply? To apply, the only requirement is to fill out the application form. I will send the link in the chat in a minute. And this form will be shared with investors, and the information you provide will be used to create investment opportunities portfolio. So all the questions are standard questions typically asked by investors, but please pay attention to the character limits. We want the information to be as clear and concise as possible.
Thank you very much, Ralia. There was a little bit of lag in the microphone at the beginning, but it's all sorted out at the end. Okay, so I see that some questions are coming, so we're going to take those questions at the end of the discussion. So now let's come back a little bit on the investment process. So maybe Guus, you can explain what is your methodology to analyze some case. How do you reach out? How do you analyze the case, and what are you looking for into a startup when you are meeting a startup for the first time?
Yeah. Yeah, I mean, first and foremost, any startup, scale-up, venture needs to concentrate on solving real industry problems. And as mentioned by Christian, Moore's law is coming to an end. The latest machines of ASML bring microprocessors close to atom levels. Then you get quantum interference. So the whole industry is facing a geometrical scaling wall, as I call it. So that's driving innovation in a different way. Chiplets, 3D stacking of dice, away from monolithic design in the latest technology node, but take the functionality and produce it in a node which is cost effective. And then, you know, you have the memory wall. Memory is struggling to keep up with processing power, so memory needs to be closer to processing. That brings, together with chiplet, all kind of interconnects and bonding challenges. Advanced packaging, obviously, is an area of interest, and yeah, heat dissipation. I mean, they get more power hungry, and to get heat out of the complex 3D stacked dice is a challenge. So we look at that. I mean, are you really solving a problem? Then the second one is, how likely as a small company is it that you find this nugget to really make it big? Because yeah, in the end of the day, you're a small goldfish swimming with the big sharks. How do you survive? How can you scale? What is the best go-to-market model? We look at the team. Is the team having relevant knowledge and track record to go after such an ambition in the first place? We make an assessment how much money is needed, not only in the next round, but make an assessment to really scale this up over the life cycle, how much is needed and with whom could we do this, and a very sharp articulated plan, including a very detailed competitive heat map. How do you stand out against what's on the market? And also a little bit of knowledge on, because you don't know what you don't know. So what do you think is going to be the roadmap of the others working on the same problems, and how can you build a sustainable, defendable position in this market? In a nutshell.
Yeah, that here you described kind of the full process, right?
Yeah.
And during the one-on-one meetings that we will offer or propose to our candidates, you will have only 5 minutes with them, a 5-minute speech. So what do you expect from into a 5-minute pitch? What is the critical information to share?
Yeah, be concise to the point and try to make us in general, VCs. I mean, 5 minutes is only so much. You need to reach the point, hey, tell me more. So you need to give the basics, leave out the details. Semiconductor, there are a bunch of geeks. I'm also considering myself a bit geeky, and we tend to lose ourselves in technical details and thereby lose the audience. So, you know, keep it simple, keep it to the point, and concise, and the end result should be, hey, we want to know more, we need to have a follow-on meeting.
And Christian, what about you? What about the what are you expecting into this kind of 5-minute pitch? And later, maybe
in a 5-minute pitch, I'm most interested to understand why is this thing happening now, and why, you know, the problem you want to solve, why has it not been there before, or has it been there before, and if so, why wasn't it solved? You know, if it's just the answer because nobody thought about it or something, that is typically a bad answer. You know, there must be drivers, there must be yeah, whatever. It can be on the technical side, but it can be regulatory, it can be whatever, but something where it's new manufacturing processes that require something. So I'm always interested, why is this happening now? And then why, and I think you said that, Guus, why can you team here, you founders, what gives you the right to try to survive in this jungle? You know, what is it? Is it just, oh yeah, because we are super ASIC designers, 5 ASIC designers who've been doing this for 20 years? That's maybe a good ticket, but maybe not sufficient, you know. And especially in semiconductor, I think if I characterize semiconductor founder teams, you know, a bit simplistic compared to enterprise software guys. You know, in enterprise software, typically the technology is not the important thing, so you have more guys on the go-to-market side of things. In semiconductor, you typically find a bunch of geeks, and what's missing is an explanation how they can actually go to market, go to customers. And European large semiconductor companies, if you want them as your customers, which is often the case, the NXPs, you mentioned them, you know, the big guys, there's so much not invented here syndrome, and it has never changed. So they are horrible. They are really horrible. So you need something, you know, some angle of attack that is pretty unique. And I want to understand that in the first 5 minutes. So at least get a feeling where it could be, you know.
I see Guus is nodding here. Well, do you want to elaborate on this particular aspect of the European market for startups?
It's tough. It's a cutthroat business. It's a global supply chain. So despite geopolitical tensions, okay, in Europe we need to revitalize, and that's all great. But we have to also be realistic. We have been neglecting a bit semicon in the last 2 decades, I would say. And it's very naive to think that you can just revitalize that industry by throwing heaps amount of money on it. So, you know, it's really important to define that nugget where indeed you, I mean, even to think that you can carve out a meaningful business already is courageous. So you need to it's why now, to Christian's point, and why you, and how can we sustain this? I mean, making a sample or a demo or this, that, or so, I'm sorry, it's just not good enough. There are other forces at play, and you really need to know upfront, before you ask somebody else money, what are you getting yourself into, and think it through. I mean, if we detect a lot of naivety in the first 5 minutes, I mean, I'm sorry, we move on.
Interesting. So, yeah, you mentioned that the semiconductor sector has a specific breed of founders which are very technology push and maybe not enough business. So, what would be the ideal founding team into a semiconductor business or business in general? Who wants to?
Domain knowledge, relevant networks beyond the local ecosystem, because there's a global industry. A lot of stamina, I would say. You know, it's rough. And then, yeah, be surrounded by the right folks of advisors, mentors, whatever you want to call it, who really can bring additional network and give proper advice, and team up with the right VC. I mean, the mistake I made with our own semicon startup in the beginning was, okay, the first few million we did ourselves with a bunch of informal investors. But these were entrepreneurs not coming from the semicon industry. And then to keep your investors from day one on board, the moment you start engaging with global powerhouses such as Apple and 𝗍𝗫 and Renault and what have you, and you have folks who want to give you advice but don't have any clue about the complexity of semicon business, that's very dangerous. So you need to also think, who do I need to have as investor on the cap table to back me? And informal investors, that's all nice and great to get going, but don't get stuck later on. You need folks who really understand what this business is all about.
Yeah, so you don't need just money. You also need a network and smart money with investors who understand really what is it to grow a business in the semiconductor world. Christian, do you share the same vision here?
Yeah, I share everything that Guus says. You know, it's always easy to think of the ideal team, and then you know, typically teams get also completed over time, obviously, but you need a very good kernel. And as I said, I mean, I'd urge every founder team in semicon who are typically very good. I mean, it's rare that you find people who are trying to start a company in semiconductor that does not at least dispose of pretty good technical knowledge. That's rare. They typically, the teams are quite impressive in terms of technical knowledge. But as I said, find this guy or the two guys that are connected to management, and depending on, you know, who you're selling to, but typically you're selling to other semiconductor companies. This is a highly networked industry with many APIs in terms of sales, you know, between companies, and people who know their way through this, who've been there, who haven't, you know, Rolodex of high-level guys. Doesn't have to be the CEOs and stuff, but you can address it. They know the guys they need to talk to, and they get their 5 minutes or their 10 minutes meetings with these guys. That is so helpful and speeds up the whole thing. If you really have something, let's assume you have something that is convincing, then being there, done it is worth a lot. You know, also people who've already built a company, obviously build a company in that space, serial entrepreneurs, even if it wasn't successful or not so successful, that is always a very nice indication for us.
Right. And if we look more at the European startups, what are the specific problems or challenges of a European startup? We often compare US and Europe, but we now also have to deal with Asia, because lots of Ventec is also investing in China. We've seen there's a fund for that. How would you compare the difficulties of a European startup compared to other places in the world?
Yeah, you need to understand that in Europe, and you know, as I said, I'm in this industry for 25 years, and quite honestly, it hasn't really changed in that sense. Our investors, we call them limited partners, the guys who give us the money. In our case, it's institutions for the large parts. They are super risk averse. They don't want to lose money. In the US, it's a different story. You know, US LPs, big pension funds, they build a portfolio of venture capital investments, and then they go like, I need a good average, and I don't give a shit if one of the funds pays back 30 cents on the dollar. If we pay back with one of our funds 30 cents on the dollar, I don't raise the next fund. because that's how they tick. You hear sometimes founders complain in Europe that European VCs are too risk averse. It's our investors who for many regulatory reasons, function like that. So in a nutshell, we need to make money with every fund that we raise. So that's how we come to the table. So that prevents us typically in us VCs, at least the ones that are here for longer stay, to invest into extremely long and deep J curves. Yeah, if you know what I mean. Now, deep tech investments, specifically semiconductor, very often have that characteristic, or at least they can have that. So compared to a US startup that says, I'm going to go into competition with NVIDIA with an inference AI processor or something, and for the first prototype, I need $150 million, they might find, if they have the right team, a stellar team, they might find that money. I think in Europe, that is extremely difficult, if not impossible. So there are some things that you simply cannot do here, or you can only do it in stages, and you start off with maybe elements of that huge vision where you can already generate some customer traction, some validation from the market with bits and pieces before you go there. Yeah? Maybe change from IP to a chip after you've done that, or I don't know. Now, it's true, the good news on that side, and I'm living that every day with two of my companies, the good news is that there is now quite a lot of money available through the European Chips Act, through several institutions there, in EIC, 𝗖𝗵𝗶𝗽, what have you, to co-invest. So at least we can, it doesn't come for free. You need to put money on the table first, and then you can mirror that. That is helpful. That allows companies to raise more money, but you still need the VCs to first put their money on the table. But that is good. That has changed over the past 5 years, I would say, if I'm not mistaken, and before that was harder. Yeah. But yeah, so I think if you want to go into that market, think about whatever you can do to get early customer validation, at least on elements of what you're doing. The thing where you build something and then in 5 years you meet your first customers, because it takes that time, that's really difficult to finance.
Yeah, I see. And Guus, what do you think about the European landscape? Maybe more in the Netherlands from your experience, but what are the specific difficulties of European startups?
Well, the European market is fragmented, so that's one element. So you really need to tap into ecosystems which are relevant to you. We are so lucky to be for our fund in the Eindhoven region, with NXP around the corner, with ASML around the corner. ASML is LP in our fund, so I recognize what Christian is saying. We also have Dutch pension funds in our fund as LP. But with ASML, for instance, I mean, why are they an LP in our fund? And by the way, the rumor is out, they're gonna invest 1.3 billion in Mistral, although they have not officially acknowledged, but that rumor is out. They do this because they see that they need to play a role in strengthening the knowledge base in the ecosystem in Europe in that matter. So really, the challenge is, yes, it's fragmented. If you want to do something meaningful in semicon, connect yourself in the right ecosystem and make use of the knowledge and the networks thereof. Yeah, and very quickly think about internationalization. So, have a headquarter in R&D in Europe. We're still really good at that. But indeed, there are some good elements in Asia, specifically Singapore, Malaysia, for advanced packaging. And they go super, super fast, and they have another risk appetite, and the same holds for the US. So, create a strong foothold, make your use of power ecosystems, quickly internationalize to counterbalance the lack of risk appetite. Yeah, let's face it. I mean, even though it's changing, there's still too little VCs, pure play, focusing on this space. Now, I'm also an optimist, and I'm trying to practice that every day. It's changing, and the whole, let's say, dual use and the allocation of capital, 5% GDP, to strengthen the defense. I mean, deep tech is dual use. There's always an angle what you can do in the dual use space. So there are heaps amount of money are being allocated, and semicon, of course, should also benefit from that. But be smart and don't focus on Europe alone. Make also use of the strength of other parts of the world. It's a global business anyhow. I mean, you cannot build a successful semicon business in Europe just alone. The scale is not enough to survive in the long run on global base. So either you shoot for a top 3 position globally, or don't play at all, because you're going to be slaughtered later on. So you have to take that global perspective and reap the benefits of other parts of the world.
You mentioned ASML as an LP in your fund, but maybe you can explain to how independent you are from ASML for your investment decisions, right?
Oh, we are completely independent. I mean, we have our own internal processes, our own investment committee. We have the LP advisory committee, but that is only they have a say if we go off mandate. So as long as we stay within the mandate, we have full autonomy. Right. The other way around is true. I mean, we have created, that's very special. I'm super proud of that. I mean, we have semicon veterans in our own team, so we can do a lot, but not everything. So should we encounter a technical challenge where a venture is really struggling with, like, hey, how am I gonna tune the wavelength of the laser to do this, that, or so on? There is a portal for us at ASML where we can every week send out technical support requests. What they then do within their fellowship is look at the right expertise who can help on this. And in the office, as you see, yeah, you can't see it, but there are 20 ASML talents running around with 10 startups now to look how they can help solve technical challenging problems. Now, this is an example of being in this ecosystem. This is pretty unique if you can tap into that knowledge base that increases the chances of success significantly.
Yeah, thank you for the precision. I'm going to take a few questions from the audience. I have a first question from Lucas Lasbacher who is connected today. So thank you, Lucas, for the question. I think it's an echo to your process. During your process, you mentioned that you are doing a full financial plan to assess how much money will be needed to go to market. So the question of Lucas was, what are the main criteria in evaluating the money to be invested? Do you have some limitations? Do you have thresholds?
Yeah, that's a very good question, actually. In general, as a startup, you need to do your homework on the VC. What we do is typically we start really at seed stage or even pre-seed, and then we reserve the money for A and the B rounds. We are a new kid on the block with a relatively small fund, only 110 million. So what we do is we do reserve management. What does that mean? That if we invest at seed, we need to reserve our contribution to A and B. And as a startup, you need to be wary about it, because some VCs don't do that. They just take their position, don't do the reserve, move on, allocate capital to the next venture, and before you know, you are raising your Series A, and then the fund says, yeah, sorry, we have invested everything, and you know, we're raising fund 2. So that is why we do this. We have a maximum exposure in the current fund where we can allocate on a single company is 15 million. So it's not only important for us, but also as a startup to really prepared on what is the funding need longer run, and how are you going to do that, and preferably engage with VCs who can also help you in the next round if you perform and deliver a milestone.
Christian, you also perform this kind of
yeah, maybe to add on to that, you know, what does it mean, a financial plan or a plan for financial means that are needed? I think as a founder, you have to understand that VC financing is sort of ticking off risk boxes, you know, on the way to success. To become this ultimate unicorn or whatever, that 100 million revenue company in semiconductor, there are, and you can, as a founder, you can, if you understand what you're doing, you can basically come up with a series of risks that are on the way that can, in the beginning, typically totally destroy the whole venture if it goes the wrong way, or when you become bigger, it determines maybe how big you can become. Is it a small play? Is it a mid-sized play, or whatever? So think in terms of this risk diagram, and you know, people are, if the risks are still very high in the beginning, maybe you have technological showstoppers. You have something where you don't even know whether at the end of the day it's going to do the trick, it's going to have the performance. So you have to tick these things off as fast as you can with as little money as you can, because people who give you seed money, they give you little money, but they are ready to take very high risks. The moment you need to raise 50 million or 100 million or something, people typically do not accept showstopper risks anymore. Yeah? So then maybe you're talking, I don't know whether this is going to be 500 million in revenues or 100 million or 50 million, but I know they already have customers and they're already having a product, blah, blah, blah. So think in this risk scheme, and I see every now and then people who are not synchronized in the way VCs see this. This is the reason why there are, as Guus just mentioned, why there are rounds, follow on rounds, because between these rounds you're ticking off certain risks. You know, you're concluding things and you're making progress in that sense. And then somebody comes along and says, oh, okay, oh, you got there now. Okay, now this is a different game. Now I can give you more money. And there's specialized funds that have more money, you know, per deal. And there are these seed funds that have little money, but make many bets, and they accept very high risk. So it's just venture capital 101, but very, very often I also see, you know, because I was characterizing semicon founders, they are typically the geeks, you know, don't take it personal, but and they are not so well trained as the other guys in speaking to VCs and thinking as VCs, because they're all double E's and not business school guys. The business school guys that sometimes learned how to speak to VCs doesn't mean that they are better entrepreneurs, not by the, you know, but they have this thinking. So try to get yourself informed about the money side of things and how the money thinks, you know, which is typically not what they have done in life. You know.
Well, thank you. We have a few more questions. Ryan, I see that you raised your hand. So if you want to ask a question, please type in your question into the chat bot. I've got a question about more sustainability technology. So companies adding more on sustainability. And the question is coming from Francis de Souza from Banyan. He wanted to know, since it's not really any longer fashionable, politically speaking, is there some traction or interest from venture capital to invest into sustainable technologies, or companies which are specifically looking for climate change?
No, absolutely. I mean, the water consumption in Taiwan and the temperature of the water just to cool the litho tools, it's a big issue. The industry has a huge negative CO2 footprint as an industry. So sustainability is super important and high on the agenda, and in the long run, you know, that let's not get distracted by some stupid people who say that this is not relevant. It is super relevant. On top of that, you don't need to be a professor to understand that the AI trend, consistently these data centers are going to consume more power. And if we don't find better ways to extract the heat other than air cooling and maybe little bit of liquid cooling, it's I mean the doing of one email these days is already consuming the same amount of energy as boiling water for a cup of tea. So yes, it's not only needed from sustainability point of view, but also from performance point of view. If we can't get more efficient way to extract heat and maybe reuse heat, the heat is causing stability problems. So it is a must do. So please keep on working on that. We need those solutions, and our fund is definitely very interested. But hey, our mandate is only in the Netherlands.
Thank you. Next question is for seed round. What kind of traction do you expect from a startup? Do you expect letter of intents, pilots? What are you considering the technology readiness level? What is the level of maturity that you expect from technology? If we talk about technology standpoint, but basically, what are your criteria for a seed round?
In semiconductor, quite honestly, again, compared to say enterprise software, where people can get the product out in a couple of weeks, sometimes, and just program something and find the first customers. In semiconductor, typically, a seed round is more or less all about technology. And sometimes it can even be slideware if the team is qualified and you think they know what they're talking about. But the best thing you can probably find is some prototype. It depends on the business model you're in, but it's about technical milestones, and the guys who will finance you understand these things, or at least have access to experts that can then give feedback on, whether it's true what you're claiming. But I would not expect in a seed round people to come along. We not only have a product, we already have customers, and that would be quite atypical. I'm not saying it doesn't exist, but it's not the typical thing in that sector.
We have two very interesting questions and only a few minutes left, so I will ask for very short answers. So first question from Nikolai Lavrov is about the quantum technologies and quantum computing and communications. What are your thoughts about quantum technologies, and how much time do you expect quantum companies to reach meaningful revenues, which is the timings are completely different here.
Yeah, it will come, and we also made an investment in the quantum space. But in general, yeah, nobody knows it. There's so much momentum, also driven by geopolitical powers. Our strategy for quantum is, hey, we don't do full stack bets. That's too risky and too capital intensive. So we look at what are key enabling technologies in the space, which have a less dependency on the architecture, because nobody knows which architecture is going to win eventually. And if that key enabling technology has an adjacent market outside of quantum, we de-risk the uptake of quantum. So it will come, and yeah, the company is called Delft Circuits. These are the guys making the cryonic cables, which are used by plenty of big and smaller players. And those cryonic cables can also be used in other application areas.
I see. Last question will be for Christian. You mentioned that each fund needs to make a return in Europe, while in the US that may not be the case. Does this mean that in Europe for semi, VCs tend to look for strong businesses, while the US for moonshot, or are you just a unicorn hunter, whatever happens?
No, that's true. There's some truth to that. There's more moon shooting in the US. I mean, in the US, you find so many funds, and you find also funds that have different strategies. But I think that the big guys, they are they need very big returns. And don't forget, if you start up in the US, you start up in a market that is typically 5 times as big as if you're starting up in Germany. And if you're starting up in the Netherlands, it's even much smaller, you know. So then you have all this.
Rub it in, rub it in.
In semiconductor, it's not maybe not such a big problem, but anyway. So in the US, you have to go fully fledged for a huge market. Otherwise, somebody is going to take it so right away. So that makes the bet always bigger, always more money needed, because they have to go full blast in the beginning, and then they need a higher return, obviously. In Europe, if you speak to VCs on a VC conference, they will also talk about unicorns and how much they love unicorns, and everybody loves it in terms of, you know, if there's real return. But in reality, we don't live from unicorns. There's too little unicorn, or in that range, real exits. We're not talking just you know, financings. There's financings taking place, and then you can declare you have a unicorn. But to get $1 billion in money doesn't happen very often, quite honestly. I'm always saying we cannot, as European VCs, we are very interested in companies that have the promise of returning or having an exit valuation in a couple of hundreds, you know, 200, 250, 300. These are great companies, but when you calculate it back, they with the same logic cannot burn through too much money then, you know, otherwise there's not enough return on the table. Because from a VC perspective, a good deal in a portfolio has to return 5x plus the money. Sorry, there's this thing now.
Yeah, it's just because we are reaching really the end of this webinar.
Okay. Yeah,
so I don't want to be too much of a time.
We can discuss that on your forum in Munich.
Yeah, thank you very much for your time, both of you.
Maybe just to end this up, don't be afraid to go to VCs and not having the unicorn story. In Europe, that is not absolutely needed. You know, you can show how you get from 0 to 50 million in revenues. You know, if that story is there, then there might be a story behind that. That's a great story, and let us know. But if it's, you know, I'm going to level out at 5 million because I'm in a super niche, that's probably not going to interest any VCs.
And Guus, do you share that? Do you share that? Are you also open to less ambitious business plan, or are you just a unicorn hunter?
No. I mean, then I would be in dreamland. No, you don't know. What we're generally looking for is there a possibility to carve out a top 3 position in the market segment they are pursuing? Because if you don't, if you're shooting for number 10, only typically the top 3 makes money, and the rest is losing or struggling to keep up or struggling to survive. Yeah, and then it's a big bet. Yeah. You know, and you don't know in this industry. If you've got really cool IP and the big guys see that as super important, they might buy you up just to block competition. So yeah, it's very dynamic. So no, we're not looking for unicorns. No, we want to build great companies, and if you do that, who are fast growing and healthy and profitable, and then we'll see nice exits. That's yeah.
I can tell you that Ryan is very happy with the answers. So yeah, we have at least one satisfied customer today. And thank you very much, Christian and Guus. You have been great speakers for us. I'm pretty sure that the audience also enjoyed. We launched the last poll because we didn't want to lose too much time. So again, to conclude, in Munich on the 18th of November, we will have a few panels, but lots of pitching, networking sessions, and one-on-one meetings. So if you want to participate, you have to apply. So make sure you do that before the 19th of September, and then we will proceed with the one-on-one meetings. So what is the result, Radia, of the last poll?
70% want to attend, so See you in Munich. And just a little information, and plus I will put in the link the people that you can meet in Munich. It's a link that I just shared with you. There's Christian, Guus, and other investors that you can meet on November 18th.
So Christian, thank you again. We will meet in one-on-one meetings in a few weeks from now, and again in Munich, and that will be a great day. Thank you everyone for participating to this.
Looking forward to it. All right. Thanks everybody.
Thank you so much. Thank you everybody.
Thank you. Have a great day. Bye-bye.
Bye.
Bye.